Here comes the number. Okay, we've broken a little bit of structure there. Crude is back up at its opening price. I've got a short signal developing on my 1 minute time frame, which is maybe missed the chance to get in, but I'll give it another shot, maybe at 4.25 if I can get a chance there. Usually, yeah. Sometimes I'll trade it off the 15 minute. Yep, exactly. You'll Yeah. Yep. Yep. Nice. Thanks, Jimmy. No, 67.94.95. It dropped, yeah, it's not pending home sales, I mean, not typically a huge market mover. So you still could have a lot of short covering potential and new money flows coming in, but this is a reversal short setup that I pretty much have to take. So I'm trying to figure out if I'll get the chance at the O fours again or if I need to jump in right here. Um, I might go with some bigger size if we trade down below the open. Oftentimes, if you see sort of the first 15 to 30 minutes trade one way and then reverse, that can be a big reversal move. There's no reason we can't retest, down here into the 6720s, other than the fact that we've had a good move. Like, we've had a good move and we held the 200-day, or we, touched the 200-day moving averages and then we've recaptured them. So a lot of times the bigger money flows, really pay attention to that. And you have to be aware, like I've been run over many times over the years because I just think that things are going to keep going down, and down and down. Of course, I started trading in '08, basically, so that's a little bit ingrained into my memory, and probably always will be. But when you have a move, like I was looking at it, it's a 6.5% drawdown from the all-time highs in the ES, and it's almost 9% drawdown from the all-time highs in NQ. Not even from the all-time highs, from the recent high at 26,349, which was not, that was a lower high from the all-time high at 26,399, which was the April, or a few months previous. So those are pretty good drawdowns, and of course we had much bigger drawdowns in a lot of the software and tech and stuff. So I mean, I think that even though I like to be on the short side, it's probably a good time for these guys to come in and start buying the tech and the NQ again. And I think so. My favor right now is to sort of be long NQ and short RTY and YM, and maybe long, probably long ES. But oil could correct here a bit. The news headlines are obviously throwing everything and the war and all that, but um, Got a couple offers in now at 97 and three quarters, 99 and three quarters. I kind of feel like I'm gonna miss this. Got some stacking going on here on the offer side. I mean, see what their appetite is to move this thing higher. I don't know if it's going to be much. Quick glance back over on my trading view charts. You're getting sort of two-bar reversals on the 15-minute. You have a really good classic 15-minute doji reversal on the YM. That's a signal I really like to use and trade off of. I don't know. Well, I don't really trade the YM, but on the ES and NQ, I like using the 15-minute doji reversal. So I'll show it to you here on the YM. When you have a big thrust like this to the upside, and then you put in a 15-minute doji, you can just bracket that doji. So you enter on a short stop there, or you enter on a buy stop there. And usually what you get is at least a quick little move to be able to scalp out of a couple. And then hopefully you get the runner. So this is setting up pretty well for a runner because you've got now these lower highs like you were calling this morning. Now we're through the open on the YM. We're rolling over on the advanced declines, and crude is back up through its open and trying to move higher as well. So I like this whole setup a lot to the short side. And now we're getting into where, can the ES hold its open or not? There's clearly going to be a lot of stops below the 82 level. Whether that actually triggers anything, or is everyone caught short and they're going to be looking for that kind of stop run to buy into. So No, I wasn't aggressive enough on it. So now remember, if there's a lot of shorts from the yesterday's session and overnight session, they're going to be looking to cover some here. So you can get this little sweep and reversal pretty quick. Watch the NQ. You see how the NQ held that opening print pretty well. And now here we go. So I'm going to try a little long here, 82 and a quarter. I'm going to see if we can rip and hold back up through the open, which is what it looks like. NQ is going to keep ripping here to me, but we'll see. And I like your short, Magister. It's just that be careful with it, because if it goes back through the open, it could accelerate pretty quick. So for me to try a short at this point, I'd probably rather try to get it back up at the figure 6,800 or so, because anyone who was long and buying these pullbacks up here, now feels a little trapped. I mean, I'm shocked I didn't just get that 82 and a quarter, but that's what happens. So I canceled my bid, but I'm kind of still looking to see how this thing reacts. If it can hold now the 84s. So I have a bid in there, 84 and a quarter. Probably won't get to me the way this is reacting, the way crude reacted at its moving average up there. It's pulled back to its open again. So if crude starts to break again, 94 and a half or whatever, um, whatever level you want to use. Like I do a lot of stuff where I try to identify if there's a driver for the market, and I just quickly try to quantify in my brain, like, okay, if crude breaks 94 and a half, does the market react? Right. And if it does, then maybe you're onto something. Maybe you've found kind of the driver for the day in the market, and you can sort of key on that as you go throughout the day to see if that continues to happen. Like obviously right now it's easy to say, oh, crude is a big driver of the market, like, right? But like even when you're looking at things in the earnings season and that sort of thing, you want to pay attention to that stuff because it could be, oh, yeah, earnings came out and so this is the big mover, Nvidia or something that's a big market cap stock. And so, you just have to remember if you're trading the indices that those weightings and that the ETFs, the indices, the all the different institutional money flow, when one thing is a driver, then it sort of forces them to basically play that same thing to balance all the other portfolios that 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 instrument is a part of. So I'm sure that's pretty basic for a lot of people, but kind of a little reminder. So I was sort of early trying to call my long, and I'm still a little early, I think, here because what I want to see is the moving average on this 1 minute curl and start to turn up. So especially if it can hold the open and curl like this little stop run down here actually is pretty close to this upsloping moving average from the 15-minute chart. So um, a lot of times those are the entries I look for on the 15-minute chart. We do have advanced declines continuing to sell off a little, but like I was pointing out, we've had a pretty good sort of um, garden variety pullback, and if the market starts to think that this war is going to resolve and stuff, like the news starts to become a factor less and less each time around. So what I'm looking for on this bid is basically a little stop run back through the open and kind of a test of this level right here. I want to see it sort of form a little mini head and shoulders on that 1 minute chart. Seems like the Mag 7 is maybe finding some stability. They were showing a little bit of selling pressure off those highs, but maybe now the buyers are coming back in on those. Um, so I've got my offer ready. If I get filled at 84 and a quarter, I'll try to sell one at 87 and a quarter and 90 and a quarter. I've got a 4-point stop that'll automatically go in. It's a little bit of a risky trade, I think, right here, but I'm watching NQ again, showing that relative strength. It's pulled back perfectly to the moving average. It held the open. My 1 minute is still sort of sloping downward, so it's a little bit, again, I might be a little early here. Man, oh man. I know, it's like it feels like they do that to you all the time, doesn't it, Niels? When you park orders. Remember, we used to get paid to provide liquidity, so we would always park our orders. And then as the HFTs and algos came around, we started realizing we had to just pay up and hit the bid on the sell side, like just to make sure we were getting fill. But it's hard for me to break that pattern, you know. I find that if I start chasing something, that's when I lose confidence and I get emotional and I get out of control because as soon as I chase it, they know that I've just chased it on a market order and then they go back and run my stop and then the stop was exactly where I initially wanted to get in and then all those things just totally mess with your mind and your emotions. And so if I have an idea, like a lot of times it's much better to just absolutely just stick with my idea and you know and take my stop. Like sometimes I'm a rock climber. It's like my biggest passion and hobby and activity. And sometimes it's like you just have to take the fall, right? And your protection, your rope, and all the stuff that you use to keep you safe, it's there to keep you safe. And so you get afraid and you kind of climb like shit. And then you realize, what am I afraid for? I've got, my stop in place. I've got my trade plan, my setup. Just get in there. And if it goes against you, it goes against you because you never know, yeah, when somebody's gonna come in as a buyer or seller. And that's all, the market is like, yeah, we trade these signals and we do our best to kind of like trade according to a trading plan, but it doesn't, anyone can affect that plan by just coming in with a market order to buy or sell. And that's what happens all the time, right? Like right here, if everyone was buying up at 6,800 and they thought we were going to go to 6,850 or something, they're trapped. So they might want to be selling. I don't know. I still think there's probably too much short exposure at this point for what we're facing going into FOMC tomorrow. So I'm going to try to be a little more long biased as long as we are above the opening print. And now I've got this 1 minute, sort of curling and starting to show, some possible upslope potential here. So like that could have been the right spot to buy. Could have tried buying it there, with a 4 or 5 point stop. And I think if you get the chance again at 6,800, that's a chance you could probably fade, sort of a first touch short. But look at how oil's now corrected back down through its open. See if oil can breach sort of the 94 and a half level. 94, really it should probably retest 94.30. And then, it's trading so thin and so wide on its ATR that things can happen pretty quickly there. So Rev is the expert, but um, for anyone trying to trade oil, you want to be pretty careful right now. If you're not sort of an expert and used to trading it. Right now, my 5-day ATR on oil is $9.50. That's come down from like $15, but normally when I'm trading oil, it's because the ES and the NQ have expanded a lot in terms of their ATRs and the volatility, and oil gives me a little less volatility normally to trade, using a tight stops the way I like to. If I'm trading well, I'm using tight stops and I'm not entering too many trades throughout the day, but all right, so we're still trying to hold the open. I'm going to try something a little more aggressive here. 89.25. I meant for that to be a 3-pack. Let's see. 89.25. And again, I'm using a 4-point stop. It'll automatically go in if my limit order gets filled. So that's this stop setting right here on Niels's platform. And then I'll be ready with my 1 lots to sort of feed out a couple, usually just if I can get one off at +3 points, then I can raise my stop to like minus a point, and that's still a break even trade. You can see the VWAP up here at 98.75, and there's a bit of a stack of offers. But nothing, I'm not seeing anything in the book that's sort of ridiculously large or indicative of something to trade off of. Sometimes you'll see, some size come in at, a 500 lot or 1,000 lot or a 1,500 lot. Oftentimes that's when markets are really moving, and you'll see those kinds of orders come in, and you can kind of get a feel for if they're chasing or not. And so sometimes I'll kind of watch for that and then try to front run it. Just flipping over here again to the rest of my charts, you can see how well NQ held the open. YM still well below the open. And look at what that reversal move was off that 15-minute doji. That was really nice. RTY didn't even test the open, and it's still trying to move higher right now. So, and then with oil, if oil can continue its move off of the overnight session high, basically those are the things that I'm watching to see, what kind of follow through we might get, if any. Again, it could just be a really, it could just be a really choppy trade ahead of the FOMC. And if any of you didn't know about this tool, you can go here um, to the FedWatch tool, and you can kind of gauge what the market's expectations are. And what's interesting about this is, so these are all the meetings right here, these tabs. So the March meeting, the April meeting, the June meeting. Well, you have to go all the way out. If you click through every one of these, there's not a single meeting that anything's priced in over 3 3/4. You click on every one of these, see 3.5, 3 3/4, 3.5. You have to go all the way out to October of 27 before you get anyone thinking that the Fed might have to hike. So I think that's pretty important to keep in mind, that the market is positioning. The expectation is that this cutting cycle is going to continue, and maybe that's not going to be the case. So I'm getting a little dip again here. I kind of just left my bid in place. The premise here would be, if you get filled, you shouldn't really break down through the opening print and through these lows. So at 89.25, really my stop probably ought to be like 6 or 7 points. But I don't kind of like doing that quite as wide. I mean, that's like a totally reasonable stop in these kinds of conditions, but the trades that, for me emotionally, when I take a trade, I just want it to go my way almost instantaneously. And if it doesn't, I'm very suspect of it. I'm suspect of my entry. I'm suspect of the price actions. There, I'm filled at 89.25. I have my stop at 85.25. Just offer one at 92.25. I'm gonna offer one at 95.25. And likely, in my mind, this could get stopped. It's sort of a risky entry, I feel like, but nonetheless, I made the plan. I made my decision to try it at that level, and now we'll see. Advanced declines are trying here, so this is one of those kinds of trades where it's like, I really feel strongly that I should be able to get my 3 points on my first target. And if I can't, that's an indicator to me as well that, like, yeah, like this thing could be going lower, like it's also taken a lot of energy to rally up to this point. So if the buying has stopped, then there could be a big air pocket below. And that's a lot of what Jimmy likes to talk about too, cascading stops and air pockets and that sort of thing. His reads are great, and the platforms and stuff that he has are great. They're a little bit I have a hard time understanding them. I'm pretty simple minded in terms of my charts and my charting and how I like to do things. Advanced declines couldn't really get through that 1600 level, so this could be suspect. But look, a 4-point stop in my world is so tight that, like, if I don't get stopped on it, it could mean that they're trapped and that the buying pressure is there, and it's gonna, all of a sudden when the sellers dry up, that air pocket could be to the upside. No, let me click on you and re-click. Try it now. Yeah, now I can. For some reason, I had to click on you and re-click. Here, I got my one filled, so I'm gonna stick my stop in just below my entry there, or maybe break even or whatever. If it's close enough to my entry, then it's basically I'm break even on the trade regardless. If I get this second leg off at 95.25, then hopefully I have a runner and it rips through this level at 97 and 01. Sorry, go ahead. Okay, I got my second one back. So 90 is the VWAP. So I'm gonna just, have my one lot there at 89.75 plus 2 ticks. And now I'm just gonna go ahead and look at, like, crude is breaking that 94.30 level. The NQ looks strong. The advanced declines have moved through that 1600 level again. Tesla on its high. Nvidia looks like it might want to go bid. Meta is looking Microsoft is kind of weak, but now what I would do is just take my levels sheet, so I can bring that over here and show you. On the ES, and now I just look for a spot to put in like an OCO order and do a kind of a walk away on my long position. So the 50-day moving average, let's see, the R2 we have at 68.06.5, and that might be reasonable enough to just take it off there if it can get there. But if it takes out that high of the day, there's kind of a pocket. There's like the potential for some real stop running to the upside. I'd maybe look towards the 68.70s. I mean, it sounds ridiculous to say sometimes, but if the low of the day is in, I do this a lot. If the low of the day is in at 67.80 and our 5-day ATR is 100 points, then we could have this thing go on up to 68.80. Now that's ignoring all this overnight upside action. But again, if all of this overnight upside action was just trapping um, a whole bunch of people short, right? Then that's the fuel for the continuation. I have a long from 89 and a quarter. So I'll throw this in like 68, 74 and a quarter limit to sell. And then when I right click, I've now got 3 orders in. This one's an OCO, one cancels other, and then cancel that. And now I'll just try to do my best to stay in this trade if it keeps going up. My problem a lot of times is I tighten my stop and I get shaken out and stuff. But so NQ currently trading 25,084, and I have an R2 level at 121 and a quarter. And look at how close that came. So that would be, something to look at. Can we break through these highs and hold? If we trade 121 and a quarter and hold on the NQ, we could get back to the 100-day at 334 or so. Now again, these numbers on my sheets get wonky because of the roll, but I'll be right back. Okay, I'm back. Advanced declines are still building a little here. I think they probably have highs for highs. So I'm watching that, and I'm watching YM, and if YM can reclaim that opening print around 586 or whatever it was. Seems pretty likely that I'll get stopped out here. I've moved my stop up to 91 and a quarter. And then if I do, and if it breaks the opening print, then I'll be on a pretty strong potential short signal. If it kind of tests this level and holds, then there's plenty of stops to the upside to fuel this thing at least for a retest of the high. Good luck with that, buddy. Later, skater. Thank you, man. If you guys saw that, I took my stop on my last unit at 91 and a quarter. And I wanted to point out that's one of the things I love about Niels's platform too is any orders, there's a button, there's a box you can check in the settings that when you get flat, any orders that are in the system will cancel automatically for you, which is really cool because I'd rather go climbing this afternoon. So, there's a lot of days when I really would love to just find my entry in the morning, have a profitable trade, put in my OCO orders, and then know that I also have like a extra safety net with his platform that basically makes sure that if I stuck some order in way away from the market, that I realize like I'm not going to get caught on that in some wicked move that. So it's pretty cool. I mean, there's a lot of really cool things um, about Delta Trader. So check it out if you haven't already. So I'm kind of, like I said, I'm on a short setup right now as far as my 1 minute chart goes. This is curling and starting to slope to the downside. Um, but since we're still kind of here trying to hold the open, what what I could, you could see is this thing reverse and hold that structure, and you may want to try it long again. If it develops that way, like at the 92s or 93s. But for right now, I'm staying flat. It looks like crude might hold as well. So if crude starts to rally back up towards its open, then we could gain some selling pressure. Um, And I don't mind selling it a lot lower. So if we break this RTH low and get some people feeling trapped, then you can get maybe a bounce back to that level at 81, 82, 83, and short that again there if you can. If you're more aggressive, you could try shorting it right here with the expectation that they're going to sweep and run some stops to the downside, which looks pretty reasonable as well, you know, especially with the big lower high on the 15-minute across all these charts, right? Often the first touch of this moving average is really good as well. So just think about that kind of stuff. Is if the buyers want to come in right here, they have a really good level to have their sell stops down below at like 77. And I'll explain a little bit here what I do with these bigger boxes. I know a lot of people like to use boxes for support and resistance levels or entry zones. This is what I do. What I've started doing with them is I box out in yellow the session, the Globex session low and the Globex session high. And that gives me the midpoint, which is that yellow dotted line. And then depending on what that range is, I then expand the yellow box up and down for what the 5-day ATR is. So right now, what I'm looking at is what if the high of the day is in? I can now take this box, which represents my 5-day ATR, and I can literally just move it up to the high of the day, and boom, there's, if the high of the day is in, ATR fulfillment would have us trading back to 6708s, which is close, but you know, also like if we can fill that gap from the rollover contract, I mean, that's pretty reasonable, right? So if you like it short, that's why I say I don't mind selling it a lot lower because, um, you know, it's just a setup. Like if it breaks this first, it kind of needs to break this level. Um, and then whether or not it follows through is kind of what your setup is. So this purple line is possibly significant for me, whether it holds or not. And we can do the same kind of thing with all these other markets. Like I can anticipate if the high is in NQ, move this box up, and there's your ATR fulfillment back down to 690 or so. If you look at the RTY, you can see we've made that lower high and then this big 15-minute reversal bar that's swept. Now it's touching the opening price. And just, this is a good one to look at, because if we move this up, assuming the high of the day is in, look at that. Well, look at how close also if you just use the low of the day in the overnight session. So it already fulfilled its ATR on the Russell. So what does that tell us? I mean, it just tells us that maybe the upside potential um, is fulfilled and limited. And again, like for me, the Russell is the one you want to be thinking a lot more of in terms of shorting because of the impact of the oil price. If like you're a spread trader, I think it's completely reasonable to sort of play that spread short Russell against. I mean, you could almost pick anything else, and you're you're basically trading as if the Russell will underperform. So if we do the same thing with the YM, I mean, look at how precise that is. That ATR is already fulfilled, and it's, I mean, within a few ticks. So if you have any doubts about whether the algos and the computers and the stuff pay attention to this stuff, the reason they pay attention is because it's mathematical, and that's how they trade. So think the way the I think the way the Mag 7 is looking here, I mean, like Meta is making a low on the regular trading session day. Microsoft just made a low on the regular trading session day. Nvidia looks pretty meager as well today. So if we can get a little test here of the open again, I think I'm going to try this short. And sometimes what I like to do is take the opening print and do a sell just above it. Because right now, anyone who's short might have their stops just above that opening print. So sometimes what I look for is this little false break of that opening print. So I'm offered 88 3/4. Want to see kind of a powerful bar and then a failure of that bar. So we got our kind of powerful bar, which is generally a really good reaction off this 15-minute moving average. So, this could just completely rip higher through the stops. But with oil sort of basing a little here, I think this could be a pretty good short trade if I can get filled, 88 3/4. So I'll be ready to buy one at +3, or -3 and -6 in terms of where that price comes in. All right, I'm filled 88 3/4. Put my first target $85 3/4, second target 82 3/4. And the way these false moves work is it should come back in like immediately. And if it doesn't, I want to be skeptical of it. If it's a false move, it basically is the computers sweeping it up and then sweeping it right back down. So in theory, I should get this 85 3/4 within, 30 seconds or something like that. And we did get up to +550 upticks there, but that was off of a reversal from -700 downticks. So the buyers could still be real. They could still have plenty of cash to put to work, and sort of it's anybody's guess at this point. And frankly, like my short signal is sort of negated at this point, as the as I've got a full complete two complete bars above this little moving average, but um, it's easy for the algos to see that now all these stops have accumulated below these lows. And again, they could just sweep it back through the other way. So there's one. Now I'm just going to do my stop right above the open. 88 and a quarter. I expect to get stopped. I'm stopped. All my orders are cleared. Look at how it perfectly retested this purple line, and now the response is positive. So I'm watching closely here because there's probably too many people thinking short. That's my guess. I'm not sure if that was news related, JM. I kind of doubt it. I think sometimes what happens is around this time frame, these are some of the best entries um, for me and my style. I find that waiting, an hour and a half in can give me some of my best entries on the day, sort of ahead of the lunchtime buying or selling that can come in. And when I start to get confused about what I want to do and what side of the market I want to be on, then I also assume that everyone else is confused, and that can lead to really choppy trading and price action. So pay attention to those feelings. If you're a short-term day trader like I am, I think it's important to pay attention to that stuff. And sometimes those are the times when I'll actually be more willing to use a stop entry. So like a sell short entry below here, or a buy stop entry above here. Because that way, if it goes and you miss the trade because you were thinking the other direction, at least you're not getting run over. But as I've said before, lots of times, like if I use a stop entry, if I use a stop to enter a position and it doesn't go my way 3 points or so immediately, I am very, very skeptical. And a lot of times what you'll see is that stop entry will go 1 or 2 ticks in your favor, and then it reverses hard. And those are the trades that really are traps for those people on that wrong side of that position. So I pay total attention to that, and oftentimes, if I feel like that's going to happen, I'll just reverse it. I'll take like, instead of a 4-point stop, I'll take like a 6-tick, or 4-tick stop and reverse it and see if I can just get sort of one that explodes in the other direction. Nice, Jimmy. Yeah, thanks for letting us know on that Truth Social. I'm checking the other rooms, but Trump, we no longer need or desire NATO countries' assistance. No longer need Japan's, Australia's, or South Korea's support. Interesting. NATO will not get involved in our military operation. Doesn't sound that great. Oil's going higher. I'm going to try a larger position short here. 84.5, bidding 2 at 81.5, and 2 at 78.5. Yeah, I figured coming back from vacation, Chris, I should probably trade the micros for a few days and not get terribly emotional about everything. See what I'm doing now, canceling a stop. That's never good. Just want to give this a little more time here and see. Since it sort of went my 4 points against me, it's like now I'm pretty careful. Like I don't want to get caught being stubborn on this. But I think that we could come back through these levels pretty easily. Let's see what the other markets are doing here. Also 2 minutes away from the close of this 15-minute bar, so it'll be interesting to see where they close this bar. Do they put in a quick long selling red bar that takes us down into the 70s, or is it going to be a doji bar? In which case, I like those 15-minute dojis. I could play a bracket on both sides. Now I'm back to my break-even point, and it's like, am I going to get filled on a couple of these, or should I just be getting out? The fact that it went through me to about where my stop was and I canceled my stop is sort of bad behavior. So I don't necessarily want to play with this too much. Like, it's maybe better to be taking some off right here, but we've got some down ticks, so maybe this will run some stops to the downside. Crude just getting back up to its open again, so that's confirmation for me. So I think I should get the 81 and a halves like imminently, and got them. Now can I get the 78 and a halves imminently? Seems like I will. I can put my stop in here. I mean, that's not the right way to do this, but because I sort of canceled my stop earlier, it's kind of like, not following my discipline great, but this is what I like. You sometimes you get into a trade, you hope that it just goes your way without looking back, and that's possibly what we get right here. If the NQ runs stops below the open, you know, seems like Nvidia has eyes for lows, maybe. No, they're not, Jam. And they haven't been for a while. So the question is, when does that meaningful turn occur? I'm flat again. I should have been probably getting short right here. Maybe the market would interpret NATO's lack of participation as good news, because maybe that means like it's less likely that we go into like a really full-blown World War III kind of scenario. I don't know.